Welcome to Digital Currents, brought to you by Morgan Creek Digital. I'm Xavier Segura. Each episode, we spotlight the topics and people changing the tech industry with a focus on AI, blockchain, chips, and big data. Thanks for listening, and please make sure to subscribe if you like what you hear. And remember, stay current.
Mark, I feel like my computer just had all of the updates because now I think it's in China because I'm seeing bamboo everywhere. I think it just downloaded a new operating system. I'm not sure what happened, but happy Friday.
Happy Friday. Well, you're wearing spring green, so now the computer is reborn as well. And we do kind of match. I mean, I'm wearing a little orangish on top, not bright orange, but a little more melon. But I decided not to go with the Bitcoin orange today. On candles. I went green. Why? Because I think there's going to be some big green candles. So, get the big reveal. So we have the Bitcoin bull. And I think we're up for some big green candles. Great stat I just learned this morning. There are $1.4 billion worth of shorts that will get liquidated when we touch 100. So we're just under 95 as we're sitting here recording on Friday. I mean, so much news in Bitcoin this week. I mean, huge number of big things to talk about. But you have been recovering.
Oh, yes.
Not only, the joys of early fatherhood, which is always fun, but then we talked about offline, you get run down and then you get a bug and then you get even more wiped out. And then, so.
Oh, yeah. It's one of those things where, you're very happy. And I think counting the blessings, you can never be anxious if you are thankful at that same time, two kind of different parts of your emotional spectrum. And so I'm just very, very glad that we are recording this. And we're not in a place where I have to see very much of anybody unless, there's some AI filter that is kind of helping me out in the process.
Yeah, exactly.
I'm thankful for that. But as you pointed out, Mark, we've seen these markets kind of go down. Mark, it was just a couple of weeks ago, maybe 2 or 3, where over at MCD, we jumped in the 70s in BTC, right? And at that point, there was some reluctance there, because we're saying we don't want to catch a falling knife. There was some buying pressure in terms of, are we going to pass the new, yearly low? Yep. And there was some talk that if we let that kind of 75-ish number skid, we might go all the way down to like the 60s or even the 50s, sort of pre-halving prices. And clearly that did not happen. And so maybe kind of getting into these ideas of why, I think there was some, to call it calm might be jinxing it, Mark, but maybe some leveling off with some of the macro conditions on the tariff front, which obviously we're more and more resembling Bitcoin market. I know you're probably going to flame me on this, but more and more we're resembling a tech stock, in terms of the volatility that we're seeing with some of the buyers that are coming in, more institutional, especially in the short term here. But as we begin to level off, I think you're right that we might experience, maybe things coming back on track towards the end of the year as we get ready for crypto summer, literally in a couple of weeks. But maybe we discuss that point about, is Bitcoin just another tech stock in terms of some of its cyclicality? It's more of a same company.
I see your point, and I won't flame you, but I will vehemently disagree in the sense.
Let's do it.
And they say if two people always have the same opinion, one is unnecessary. So, we need to be necessary. But and I'm not disagreeing with you, by the principle. I'm just saying that when you look at the short-term fluctuations, you could say, okay, look, there's some correlation here. Or there's people acting the way they do toward tech stocks, right? They're
Right.
buying, as it's going up, and they're selling if something bad happens. There's definitely that. And on the margin, those incremental buyers and sellers, they get all the press. But it's the reason I'm saying no, and that I'll disagree is the data is showing a very different thing. So
Okay.
when you actually look at year to date, Bitcoin is basically flattish. It's up a little bit. And tech stocks are still down double digits.
That's true.
And many tech stocks are down much more than that, 20 plus.
Yeah.
So that's one piece of information. And it doesn't mean that when the tariff nonsense really escalated, or Trump's saying, I'm going to double down and triple down. And I mean, just the dumb. And then definitely we saw liquidations, not of shorts, which I think is going to happen this weekend, but of longs. And so in liquidations, everything correlates to one. And so you get this period where like, oh, see, they're all the same. Well, it's because in tech stocks in particularly the Mag 7, it's the most concentrated the equity market has ever been. Right? The U.S. equity market has never been this concentrated, not in the dot-com bubble, not in the Nifty 50. The amount of money in the top 10 stocks never been higher. On top of that, we have margin debt. So all the brokers are lending their clients money. So, hey, if a little bit of stock is good, a little more is better, and you'll pay us 5% interest, but you'll make more than 5%. Don't worry. So margin debt went crazy. Well, then Trump comes in and says, trade war. And stocks start to go down. Well, if you're levered, stocks go down, you get a margin call, right? So you have to post more collateral. Well, you don't have any more collateral because you're fully invested. In fact, 3 months ago, we hit a point, which we've only hit one or two other times in history, where we were net levered. Like the overall portfolio manager position was 103% invested, which is crazy. Usually there's cash on the sidelines, but everyone was all in. And so you can't sell the asset that just fell 20 or 30%. So what do? You sell what you can sell. Bonds. So bonds, yields started to go up, which was antithetic. So wait, people are supposed to go to bonds and buy bonds and push yields down. Well, that wasn't happening. And the worst part of that was the Japanese carry trade super leveraged. I'm talking 50, 60, 90 times levered. Hedge funds were getting unwound, and that's why yields started to spike out of control. And Best and Fine had to say, we need to stop. We need to fix this, because if we lose control of the bond market, it's game over.
Right.
So you sell your bonds. You sell. Historically, you've also sold gold. But what happened with gold is the opposite. You had a massive short squeeze. Well, as gold started to look interesting to foreign countries, particularly China, China's gold acquisition, it literally went vertical. Not only the government, the PBOC, but they started pushing ETFs to the populace. So they started buying gold. So suddenly there was this massive short squeeze, and we went from 2,700 to 3,000 to 3,200 to all the way to 3,500. So you couldn't sell your gold because it was going up. So you sold your Bitcoin. And so for a short period of time, we saw that dip. And what was amazing to me, if you went back to the beginning of the year, the estimate for the year was that prices would peak in January, February, then they'd have a drawdown through summer, and we'd get to 72K. And then we would have the final leg up into that, end of the 4-year cycle, beginning of crypto winter in October-ish. And we get all the way to 170-ish. Pretty much on cue, we went up, we turned over, we touched 72, we bounced right off it. Now we're all the way back to 95. Does that mean we won't have some more kind of pain through summer?
Mm-hmm.
I would have said no, and I would have said that we were probably going to languish until summertime. But a couple of things happened that I think changed the dynamic. So the downdraft in April, why were people surprised? We had a 269% year, big taxes due, people need to sell to pay taxes. That starts the down. Then you had the tariff stuff. Shouldn't be surprised by that. And a 30% correction in a bull market happens all the time. Look at 17, look at 21. So in 21, we peaked in February, we troughed in June, and then we were off to the races until November.
Well, it seems like, Mark, you're beginning to convince me, right? Because I was always taught, when in doubt, zoom out. But it seems like we're in a different pattern now. You know, when things look grim, zoom in. And I think that's one of those things where we're seeing this decoupling, to your point. And I think I'm just trying to wrap my head, Mark, as many people are, that Bitcoin is increasingly becoming digital gold. It's increasingly becoming this hedge to inflation. And when, you know, the equities market has been getting cooked, we've been calling this for, you know, a number of years now, when we've been seeing what's going on with earnings relative to share prices and kind of that gap widening. And at some point there would be a reckoning when people just realize the fundamentals weren't there, and a weakening gold.
And that's a great point, Exxon, in that gold and digital gold
Mm-hmm.
are very different instruments,
Right.
assets, than equities. Equities, you're buying a discounted stream of future cash flows, in theory. Now, there's a lot of meme stocks and stuff that don't, but bottom line, in theory, you own a piece of the company, you own their future cash flows, you discount it back based on expectations of earnings growth, and you make a bunch of assumptions. So one of the things, you know, Buffett always says is, you know, gold has no cash flow. No, it doesn't. It's a commodity and a currency. And so the difference is an ounce of gold will always be an ounce of gold. You're not going to change it. You're not going to alchemy it. You can't print an ounce of gold. You can mine an ounce of gold. You can go do work, like serious work, digging out of the ground, processing it, smelting it, stamping it. Now you got your gold coin. Okay, but that ounce of gold is never going to change. But we don't price gold in gold. We don't talk about how many ounces of gold, you know, that chair costs or this cup of coffee costs.
Mm-hmm.
We talk about it in dollars or yen or euros. Well, dollars and yen and euros are fiat currencies, which literally can be created, printed. Now, we don't print anymore. You know, we used to literally load the paper into the printing press and we would print it. And now it's you push a button and electronic ones and zeros magically appear. But if I can print money out of thin air, new money supply, well, then the price of stuff denominated in that money goes up, right? Price of houses, anything that's scarce, land, you know, collectible Pokemon cards, rare guitars, whatever it is,
Mm-hmm.
you know, like there's only one guitar that Jimi Hendrix played the national anthem on, right?
Right.
There's only one. I mean, and so if you want to own that guitar, you're going to pay a lot of dollars. You're going to pay more dollars today than you would have paid in 1970s, you know, when you tried to acquire it.
It's funny that you should mention that, Mark, because I had this tradition that I was starting. You know, in fatherhood, you want to pass down, create the legacy. So amongst some other things, I started getting into it with guitars because I can hold on to it before it goes to my son. So I will go to the prop mart and check this out in the other room. It is the Woodstock Olympic White Jimi Hendrix.
Oh my gosh. And I did not know that.
That was unplanned.
Unbelievable.
So we will set that in the back over here.
That is unbelievable. That is so cool.
And good segue. Good segue.
But here's the thing. So you say, well, okay, but but money supply was shrinking. Well, it was last year, but now it's growing, and everyone's seen the chart. So if you overlay M2, global money supply, and the Bitcoin price with a lag, and how long should the lag be? 90 days, 105 days, 120 days? There's a lag. It takes a while for the money to get into the system. Bottom line, M2 started going up 3 months ago. Bitcoin was languishing, but now Bitcoin's turning, and it's projecting on about a 105-day lag that, we're going to hit that 150, 180 range sometime in this fall. And so all that goes to gold and digital gold are priced in these other things. If you own an ounce of gold in Turkey, it's been a very good thing because the lira has spiraled down out of control because Erdogan's an idiot. And the same thing in Venezuela with Maduro. And there's a common theme here, bad men doing bad things and the populace suffers. But if you took those pieces of paper and exchanged them for something, whether that was gold, a stable coin, Bitcoin, any scarce asset. Now, stable coins aren't perfectly scarce, but they hold a set value relative to what they own, right? You can't print more of them, so to speak. Right. They own what they own. And I mean, there can be more stable coins, but they have to be backed by the ultimate value of the currency. So I think about where we are in this cycle of adoption. And the thing I mentioned this week that's big is, Cantor Fitzgerald, right, where you got Lutnick is this Secretary of Commerce. His son, he puts his son in charge of the company. So the son announces a deal with Tether. Remember, right before Lutnick took office, he bought 5% of Tether. Now, Tether is this dodgy, to use the British vernacular, firm in the Bahamas that doesn't really release any information, super profitable because they issue these tethers, these stable coins, and the world, not much in the U.S., but the world uses them. People would argue all the bad people use them for money laundering and overt sanctions, but okay, that's probably true. Remember, more bad stuff's done with dollars than anything else, mostly fake $100 bills. But maybe some bad stuff's being done. But there's also plenty of good stuff because someone in Indonesia wants to send something to Malaysia, they can do it with a tether, and that works. So but why won't they show their books and show? So this is interesting. You got Tether, and then you got SoftBank, Masa-san, right, who Trump seems to trot out every few months to say, hey, I have this great relationship with Masa-san, and he's this genius. And okay, so you got Lutnick, you got Masa, and you got these dodgy people in the Bahamas, Tether. Well, then they link up and say, okay, we're going to hire Jack Mallers, who's CEO of one of our portfolio companies, Strike. We're going to make him the CEO of this new company called 21 Capital. And we're going to do a reverse merger into a Cantor Equity Partners SPAC. And so the SPAC price has gone like this because people can't do math, right? They're like, oh my gosh, they're gonna put 42,000 Bitcoin into this new entity. That's worth 3.6 billion. This stock was only worth 20 million, so it needs to go up. Guys, there's this thing called dilution, right? That new money, those 42,000 Bitcoin, get the majority of the company. Then Masa putting in 900 million, he's going to get some of the company, and Cantor is going to put some money in. They're going to get part of the business. So that little piece, that SPAC is going to end up with 2.7 to 2.9%. So, I mean, it's worth 100 million maybe, and it was 20. So, okay, it can go up 5 times, but it shouldn't go up, went up almost 2 times yesterday. So people are going to lose money on that, but that's okay. But my point there is that what are they doing? Well, they're just trying to copycat MicroStrategy. We're going to issue debt. We're going to issue bonds and equity, and we're going to buy a bunch of Bitcoin. I've heard about that strategy for a while. But we've never had a commerce secretary being involved in the company doing it. That's a little dodgy. And, it's my son. Yeah, but in theory, elected officials are supposed to put all their stuff in a blind trust and not be active.
Right. The emoluments clause, right? We all remember it from Schoolhouse Rock. I think as you describe some of that stuff, Mark, there's so many things that come to mind, like what was going on this week. So I think, okay, audience, I think Mark has convinced me Bitcoin, tech stocks, separate but equal, right? So we're at this point where, in this week, let's just even zoom in. So Monday was a pretty bad day on markets, right? Not so for Bitcoin. We rallied past the 90K mark, and then, we on our way up to 94. Tuesday, there was a reversion, of course, for stocks. They did a little bit better. We started hearing that the trade war might cool down a little bit. And then on Wednesday, kind of everything started doing a little bit better when President Trump dialed back some of the criticisms of the art of the Federal Reserve. Which
my favorite meme, the art of the kneel. So you got Trump kneeling down in front of Xi.
The art of the kneel. That's so fun. And the thing, obviously, that you mentioned reminds me of a strategy we recently incorporated that we should probably talk to folks about. Because, this idea, Mark, is not going to slow down anytime soon of if there's value in an asset and there's a company that can stand to gain from the value of that asset, well, then they'll look for a way to do just that, right? Yeah. So, we try our best to look for the best crypto that we can. We believe that Bitcoin has the staying power. So, that'll always have an allocation. But then there are others that are trying to, fight for the next spot. We thought it was Ethereum. It's kind of retreated. It may be coming back a little bit. But, Solana was one, for all its warts, Mark, is still continuing to do well, even though it's hit a little bit of a bottom. That didn't stop us from thinking, well, what else can we do with Solana? And as it continues to be a strong crypto in the market. So our friends over at GSR had a wonderful idea, a great firm out in London, that we could replicate, to your point, the MicroStrategy strategy. Or I guess they're just strategy now. So we can replicate the strategy.
Yeah, right. It's just strategy.
It's a strategy. So they found a holding company, UPXI, and the idea was that this company now is going to hold Solana on its balance sheet and put that into this entity, 100 million getting piped into the company. That obviously adding cash to a balance sheet is always good. Getting that into appreciating asset, even better. So I think our hope here is that this kind of shows us a couple of things. One, this is a trading strategy, right? This is the feature, not the bug. As far as we look at how companies will look to respond in this climate when equities are getting slashed. And Mark, maybe this is it. Maybe this is the point where we can figure out that divergence between how tech stocks are acting and how crypto is acting. It's inevitable that this pathway might be in things like pipes where we invest in and figure out, could there be a way to improve, some of these equities?
Yeah, in essence, you're creating a series of what potentially could turn into banks, right? In fact, I will argue that's why, when MicroStrategy changed the name to Strategy, they put the Bitcoin symbol, so it's Strategy B.
Oh, I like that.
And what it really is, I think, it's Strategy Bank. And yesterday was the big day in that the SEC reversed the rule that they had put in place that banks couldn't transact in digital assets. And so, you had Signature Bank and a bunch of others basically get shut down during, Operation Choke Point 2.0. Yeah. Well, now that all got reversed, and you've seen Coinbase say they're going to probably apply for a banking license. I think maybe even Kraken maybe mentioned it, but Coinbase for sure. My guess is that strategy is first, and then they just add the ANK to strategy B. But that's going to be Bitcoin focused. So it's going to be a Bitcoin bank. Well, what's a Bitcoin bank? A Bitcoin bank is, you own the Bitcoin. That's your lending base. And you can lend it out. You can, do a whole bunch of different things that banks do. Now, some will say, well, you can't call them banks. Banks are with fiat and they're regulated, and fine. Call it digital financial services companies. I don't really care. But what these companies that are thinking about other assets, whether it's Solana or others, you could do the same type of thing. And the difference is stocks, again, tech stocks in particular, you're making something, software, hardware, some sort of technology, and your ability to make that is going to define how people want to buy or not buy your stock. The difference here, owning a pool of Solana or owning a pool of Bitcoin, that's an asset pool. And you say, well, then why should that company, quote unquote, that stock, trade at anything other than the net asset value of the asset? Well, two reasons. One, because you can issue new equity, okay? And if the stock trades at a premium, you can issue at a premium and buy more than you otherwise would. So you get this arbitrage, and Saylor's been on TV multiple times talking about this. But even better than issuing new equity to buy more, you can issue debt.
Right.
If you can issue non-recourse debt, basically at zero-ish interest, because there's so much demand, you create a levered fund. And essentially that's, people say, well, Warren Buffett, he's beaten the S&P for all these years. I'm like, yeah, because that's what he is. He's a levered index fund.
Mm-hmm.
Like, no, he's a stock picker. Like, look at what he owns. Look at it relative to the index. Look at his correlation to the index, super high. Oh, but he has this leverage in the sense that he has an insurance company where he has the best leverage. Most leverage, you have to pay to borrow the money. With insurance, you get paid to borrow the money because people give you their money and then wait until they have a claim. And so you get to invest that money while you're waiting. So you get a positive return on the borrowed money. It's a beautiful thing. Insurance is an amazing, amazing business in many, many ways. And
one thing that you said too that was kind of really interesting is the idea of kind of jumping in onto this banking side where we're having digital assets, you're having bank, kind of the reversion of Operation Choke Point, maybe Operation CPR, that we're kind of now in this reversion course. And by the way, the UPX trade has done very well this week. It's one of the best performing stocks in the world, 700%. We hope that, there continues to be growth and value there. But what you're mentioning, Mark, reminds me a little bit of this idea people were calling for, a lot of on the retail folks. We even had portfolio companies that looked at providing such a service, and it was insurance for your Bitcoin. So if I'm a bank, do I now have FDIC for my crypto, but wait for it, that's getting insured by the federal government, who has now what plans to have Bitcoin on their reserve. So you have Bitcoin backing up Bitcoin. Mark, the world is changing as we know it.
Well, the world is changing. And look, that's why, it's why we do this. Why we join forces and form Morgan Creek Digital. It's one why we do this show. Is once you see the light that digital is inevitable, right? That we lived in an analog, offline world for a very long time. Most of my childhood, and it was pretty cool. I loved the fact that I rode my bike around and I drank a lot of Slurpees and I played the sewer pipes and did all kinds of crazy stuff. But that was the analog world. I listened to physical record albums. I had a Walkman with a tape player, right? People are like, what's a tape? And so, I literally had the original Walkman. I should have kept it as a collector's item. But all of that stuff was analog. And then we went to the online world, the electronic world, where everything became ones and zeros on a computer screen, and now we're mobile and we have our phones. But all of that is the electronic form of analog goods, music, for example. So an MP3 file is just an electronic code for the physical analog little wax on the, and scratching the needle or playing the notes on the guitar.
Mhm.
Okay, that's fine. But the problem with electronic is copy paste. Like literally you can copy an MP3 file and send it to all your friends, and then the music industry doesn't get to sell any more music. So digital came along, and digital gives you the ability to create unique assets in the digital realm because of blockchains. And the blinding aha moment was that, whoa, everything is going to go digital, meaning money, goods, ownership, everything. Now, not the physical, like this physical building is not going to be digital. I'm not going to live in a simulation. But the ownership rights to this building, I won't have a physical title anymore, a piece of paper that I could lose or could burn up in a fire. And I won't have to store an electronic document with a title insurance company that charges me money. I'll have in my wallet, right, a digital form that I control. And this is true of everything from my health information to my DNA. I mean, people, I'm sure, have freaked out about this, right? Was it 23andMe went out of business, went bankrupt, and the bankruptcy guys like, well, we could sell all this DNA that people gave us to, and thankfully they gave people the option. Well, you could opt out. You could call up and get your data back. Now, whether you can actually get it back, I don't know. But in theory, you could get your DNA data back and be in control of it. Well, we never should have been able to give that away in the first place, but people didn't really get why your DNA was so important. But all that said, I think we're at this interesting time where everything in our world, whether it's banks, and you say, but it's not a bank. Fine. I'm perfectly happy. I said 839 years, banks have been the center of the universe, right? Financial services, the biggest industry in the world by far. And banks, they've made life better for us, right? The fact that I don't have to meet you on the corner with a sack of money.
Right.
You make an exchange, and on the way to the corner, get hit over the head with a wrench, and they steal my stuff. I can wire you, for a fee. So I don't love that. I don't love the fact that the bank can decide whether or not I can move my money, because it's not my money, it's the bank's money. But in the digital world, if I have all my value, I can be my own bank in Bitcoin, and I can determine when and how I send it to you or anybody else. That's a superior model. And let's say I don't want the hassle of holding my keys and worrying that if I lose or forget my keys, that I could lose all my value. We're going to have things like Strategy Bank and maybe, Coinbase Bank and other digital financial services companies. Now, the maxis will say, oh, no, not your keys, not your coins. True.
And Mark, wasn't this not supposed to happen? I thought the whole point of crypto was they were supposed to disintermediate banks, not become banks. So this is kind of a little bit
and look, at the purest sense, we'll get there.
Yeah.
In the future, right? When someone figures out how to safeguard us from ourselves, right? And safeguard you from being SIM swapped, right? Someone, fakes your identity and takes over your phone and raids all your assets. And I'm not saying we want to roll chains back or do any, but what I'm saying is there needs to be a better UI UX, in my opinion, so that everyone can be fully digital. And I think it will happen. And because you're right, peer-to-peer means no intermediary, right? Peer, me, to peer, you, doesn't need to go through JP Morgan or Coinbase or anybody else. So I totally agree with you. But I do think this CFI, right? So there's TradFi, the old world. There's DeFi, decentralized finance, and then CeFi, centralized finance. It's an interim step, I think. But we'll see. But I do agree with you that at the end, it'd be, well, and we're working on it with one of our portfolio companies. Figure has an idea to create a marketplace for money market, right? So think about it. You have cash, or I have cash, and it's sitting idle, and we want to earn some interest on it. Well, we can buy a money market fund, or we can deposit it at a bank and give it to the bank. Well, how about we, through digital control, say, you know what? I trust you guys. I'll lend you my money for a certain amount of interest. And if you do that with a big enough pool, again, this is all financial services, insurance, banking, it's a work better when there's a bigger pool, right? Where you can diversify your risks and have different exposure. So if all of the risk in, say, a money market are in Florida-based businesses on the coast, and there's a hurricane, guess what? You're going to lose a bunch of money. Whereas, or for insurance company, if their only clients are people on Florida beaches, they have a lot of risk. It doesn't mean it's going to happen. The hurricane doesn't have to hit, but if it does, you lose everything. So you want to have maybe some Florida property and maybe some Hawaii property and maybe some Canadian property and maybe some in the Midwest, which, isn't going to get a hurricane. So,
right. Well, Mark, we could probably get out on this quick chart of the week, as I know we're running up close to it, and we'll swing easy here and just land in the fairway and talk about AI funding, because I think that's kind of the other thing that has dominated a lot of our bandwidth and a lot of our attention. I will quickly share my screen and remind our listeners, as I do every single time I do this, check us out on YouTube, rate, review, subscribe, and keep supporting the show as you guys have done. Now, Mark, this is no surprise to us, being in the biz, that AI dominates the unicorn sphere. What is the surprise behind the number is that what is happening in 2025, not pictured, Mark, is more of the same, right? So last year we saw 49 US-based AI startups raise more than $100 million. And now we're not even halfway through 2025, Mark. And I've just counted it, we've got 19 that have raised over 100 million, and presumably the more you raise, the more you're valued, certainly in post-money, usually in pre-money as well. And what we're seeing here, to your point, I think you mentioned, SoftBank being highly favored in this, economic political climate. They recently invested in a couple of large companies like Runway, which was a Series D valuation, $3 billion, General Atlantic, SoftBank. And then we're arguing at this point, Mark, that, this may no longer be venture capital, right? And there was another chart, Mark, which I could have pulled up. The time that it takes to reach the unicorn status is drastically shorter than what it used to be, which is to say that many of these companies don't have revenues. Many of these companies will never have revenues. And yet, here we are. So, Mark, what are your thoughts when you see things like this?
If you watch It's a Wonderful Life, right? A movie from the 1930s. I watch it every Christmas, love it. And, when George Bailey goes in to Mr. Gowers and he pulls the lucky machine, the lighter thing, I wish I had $1 million. And for most of American history, modern American history, like from the 30s through the, call it the 90s, even in 2000, being a millionaire was a big deal, right? To have $1 million was a big deal. Well, now...
We saw that in Austin Powers, right, Mark?
Yeah, now $1 million, it's just not what it used to be. And now they talk about billionaires, right? You got to be a billionaire, or you got to be a $1 billion valuation. Well, $1 billion, unfortunately, isn't what it used to be, because 80% of all the dollars ever created in the 249 years of our republic were created in the last 5 years.
Wow.
So $1 billion valuation for a company really just isn't that big a deal. I was having a conversation with someone yesterday, and they're like, yeah, a bunch of these companies I think would be great. They'd be $100 billion companies. I think about that. And that's like the low end. Mm-hmm. It used to be that there weren't any $100 billion companies. And now we have a handful of $1 trillion companies. So I'm not saying that the getting to $1 billion valuation isn't a big deal. It is, but it's almost that decacorns are the new unicorns, right? Mm-hmm. That you got to get to 10 to have something notable. I think what this chart says to me that is interesting is one, everything's just being relabeled AI in order to get, because most of these are software. You see software at the bottom, only one. Like most of these are software companies.
Right, exactly.
I mean, and okay, mm-hmm. you say it's like Salesforce saying they're an AI company, right? No, you're a database, you're a CRM company, you're a database company, and yeah, you say you put an agent, and Microsoft, oh, we're an AI company. Really? So they announced this new release of their upgraded Copilot for their 50th anniversary, which is amazing that they're 50 years old. But yeah, I mean, I was there when it was being formed. I didn't, smart enough to go work there, but the first office, I've told the story, right, was literally right across. There's this highway, 405, and we used to go to this drive-in burger place called Burger Master after baseball. And so I'm a 10, 11-year-old kid and going to Burger Master, and there's this little tiny, and the way Seattle works is like, the buildings are like built into the forest. So it's kind of this cool setting. You got all these trees, and you got this little white building. And this little green sign says Microsoft. And it's like, what's that? What's micro? And no. And then it was one little floor, and then it was two little floors, then it was three little floors by the time I got out of Pony to Colt to Babe Ruth baseball. Mm-hmm. And then they took over Redmond, and now they're taking over the world. But the point is, this enhanced Copilot, is that just because, your original Copilot really didn't do anything? Like, my new phone, it's got, Apple AI. Haven't used it once. Not once. I mean, not only because it's just not intuitive to use, it doesn't do anything. Although I will say, I do now use pretty much every day, after being very, very skeptical, ChatGPT. Mm-hmm. It's gotten so much better. I still use DeepSeek, but I can't get, because I'm not Chinese, I can't get the latest DeepSeek model. Mm-hmm. So mine lags a little bit. So if I want something in real time, like I asked, what were the top 10 stories of the week? And it pulled up a bunch of really good stories on AI and blockchain. And the one I thought was funny was, climate change and all that, environmental stuff seems like it's faded. Nobody really cares. So the IMF was like, well, Bitcoin is bad for the environment. And everybody's like, no, it's really not. So like, AI is bad for the environment. So now they're saying, AI is bad. The big story though was Huawei launching a new 5 nanometer chip, and this goes across AI and chips, a 5 nanometer chip without EUV.
Wow.
This is mind-boggling because ASML, the big company that makes these big machines, these EUV machines that, basically etch the silicon and allow you to deposit the transistors, billions and billions of things in this little tiny space. And it was a monopoly. It was basically a monopoly. I think there was one other company that kind of made machines, but they're basically a monopoly. And the sanctions were like, well, you can't sell these things to China. China's like, fine, we'll figure it out. And so just like DeepSeek said, well, you won't give us the chips, we'll figure out how to use software to make our regular chips better. Now Huawei has created a chip without EUV.
Amazing.
This is so big. I mean, mind-numbingly big, because if you don't need EUV and you don't even necessarily need silicon, you can start thinking about new materials and new ways of making Moore's law less relevant. So really, really exciting stuff.
Yeah.
And
we'll probably have to dive into that one a little bit more, Mark, because we do had to head on out. And I did, while we were saying this, cheat and use ChatGPT to figure out the difference between a million and a billion. And I know this stat is going to blow you away. If you had $1 million and you spent $1 every second, in about 12 days, you'd be done. Or basically you'd be, a teenager in that movie Blank Check from my childhood, which I loved. Gets $1 million and he buys a big house and he runs out of money. And bad guys, eventually he gets let out of trouble. But if you had $1 billion and you spent that same rate, $1 per second, it would last you over 31 years. So that is a quite different order of magnitude there, and we'll probably have to get out.
Remember, 1,031,710 years. Crazy.
This is unfathomable. Mark,
well, feel better.
Thanks so much. We'll have to remind our listeners, as always, rate, review, subscribe, and to stay current.
Thank you for joining us this week on Digital Currents. Check out our links to our website and social media in the show's description box. Please make sure to subscribe if you like what you hear. And remember, stay current.
This podcast should not be construed as investment advice nor solicitation for the sale of any security, advisory, or other service. Investment themes and ideas discussed may be owned by funds managed by the host and podcast guests. Any conflicts at the time of production have been mentioned by the host but are subject to change. Listeners should consult their personal financial advisors before making any investment decisions.